by Skoda, only on Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Asia as a bucket is doing fine. You've got Nikkei 225, which is up about almost 0.5%. Shanghai is flat, and so is Hang Seng. For the SGX Nifty, though, a marginal dip in today's session. We've been talking about how our markets are looking out for global cues now, but it's clearly a trigger-happy market. You get some amount of news that you can latch onto, and that's the day you see a big move. And
when in that getting sold too.
Yeah, and post that, it's a complete lull.
Yeah, it's even up moves are getting sold into the arena. That's the problem, isn't it? Yesterday, a fairly decent move on the back of the global markets.
And a very shallow market. There was absolutely no volume. It was like 26,000 crores in terms of net NSE cash turnover, which really doesn't go by with the average of about 34,000 that we've been seeing as usual.
Yeah, and FIs came in the day before, and yesterday was a 300 crore sell number as well. So very difficult to trade this. As somebody's comment yesterday on the email said, there's a chartist who, I don't want to name the person, but he sent on the mail to us saying that the markets came off, left the chartists clueless about what to do in a scenario like this.
Yeah, but majority of them are still long on the markets. I mean, they are hopeful to see a slightly bigger upside from here on. But remember, 11,187 odd is the 200-day moving average on the upside on the Nifty. So till we scale that, it looks slightly more dicey with regards to whether or not we sustain any sort of an up move. But the other up part of this is the futures and options side, and on the derivatives end, what's been the setup that we need to keep in mind. Navneet, she joins in to highlight that for us. Navneet, good morning.
Good morning to both of you. Well, yesterday Nifty definitely failed to touch that 200-day moving average, and participation, which has been lacking in this market, is clearly visible on the futures and options side as well, as there's been unwinding which is taking place after every second day. So there was some bit of build up on Friday, but yesterday once again on Nifty futures, open interest was down 2%. The premium came off from about 18 points to almost 4 points, and similar was the case for Bank Nifty futures, where premium came off from 45 points to almost 17 points, and unwinding to the tune of about 7% was seen for the Nifty Bank futures. If you look at the options data, there is no directional move which is coming into the markets, though last week we defended the 10,900 mark, and in fact this is India Wix which moved marginally higher in yesterday's trade. But maximum open interest concentration for this week's expiry is at 11,000 call, and look at the put side, it's almost at the 11,000 put as well. So we're not getting any range per se, either on the upside or on the downside, though in yesterday's session for majority of the day we were trading in the positive territory. There was signs of more of put writing which came into the system. Have a look at 11,100 strike where open interest addition was seen, and 10,900 however saw some bit of unwinding, and you've got 11,200 now which is out of the money. Call strike did see some bit of OI addition. So for the day, probably once again you can watch out for that range of 10,900 to about 11,100 on the upside. But talking about individual stock futures for the day, Mahanagar Gas will be the stock in focus. In fact, if you noticed yesterday, the futures were trading at a discount of nearly 18 to 19 rupees, and BG Asia will sell their last tranche of about 10% today. Biocon 52-week low, fresh short position seen here yesterday. Short covering seen in PVR, which was up about 5%, and IDBI Bank, which is up about 11 to 12%. So a bit of, that's the new one, by the way, in the F&O ban period, besides Dewan Housing. And very quickly, what happened to the FIs? Unwinding seen on the index futures side, but if you look at the options side, there were more of short positions seen, which came in the form of put long as well as call short, because more contracts were added on that side. With that, it's back to you guys.
Well, thanks a lot for that, Navneet. So clearly, if you can look at the technical setup or the derivative setup as well, there aren't quite strongly pointing indicators as to what the markets will do in the near term. However, if you move on to specific stock, it's a different thing. Now, before we get in, Mayuresh Joshi, just want to highlight what's happened in terms of a report. The CG Power Risk and Audit Committee has raised red flags on, well, a number of findings that they have gotten. Now, this Risk and Audit Committee made some recommendations to protect the interests of the company and the shareholders. The key findings, and Devina, this is serious because we've seen what's happened with some of the other companies in the past as well, when such findings have come about over a period of time. What's happened to the equity price as opposed to and the company as well. But some lapses which have been found out. let me highlight point number one. And of course, Devina will probably come in with the others too. But the total liabilities of the group understated by 1,600 crores as of March 31st. These amounts have been either recorded as liabilities or disclosed as contingent liability in the management compiled financial information. This is a serious issue.
There are many other aspects also which have been understated, and there have been issues with regards to, them being co-borrowers to related party transactions and things like that. Advances to related, unrelated parties, they were understated by closer to 2,800 odd crores as of March 31st, 2018. Assets of the groups were purportedly provided as collateral without any authority, and the company was made a co-borrower as well, and a guarantor for unrelated third-party loans without any authorization. So these are serious allegations. Net worth of the group was potentially understated due to unauthorized and inappropriate write-offs. The stock has not been really doing all that much. In fact, it's been in a lull period for the last 2 months. It's been at the oversold region. Even if you look at it from a technical standpoint, it's lost 58% this year. Volumes have been almost missing on this particular stock. June onwards, you didn't see much. It was a clear glide down for the stock, and it's trading way under all of its short-term moving averages and even its long-term 200-day moving average. So the stock has been completely avoided, actually.
Yeah, but to be fair, last few days the volumes have come up because 2 million shares traded on yesterday's session speaks that there is some activity there. But even point number 5, Devina, they're saying that certain transactions were carried out by company personnel and prejudice to the interest of the company. They have been undertaken in a seemingly fraudulent manner and hence warrant further investigation. So not only what has been found thus far, but something that could even come out later on. And this smells of issue or problems for almost everybody associated with the company, also the equity shareholders who don't quite know the going-ons in the company. So, well,
and obviously, what's the result of something like this coming out.
Yes, but
anything related to a corporate which has corporate governance issues, they're not spared.
They shouldn't be spared.
Yeah.
Let's get in Mahesh Joshi, fund manager at Angel Broking. He joins in right now to talk about this and more, because there are some stocks which are in news today. We'll talk about all of those. Mahesh, good morning to you. We were talking about CG Power and therefore want to come to you on that first. This is a very damning report.
So you won't want to say more about that, Neeraj. I think you mentioned it all. I think it's always better, I think, to look out for companies where I think the governance issues probably are not very, very evident. So I think the large cap names, the well qualified names, specifically in market conditions like this, I think they are probably safe bets to probably hold on to your positions. No point discussing stocks like this.
All right. Let's talk about what's been happening in the auto space, and we will be getting an industry veteran to talk to us. But I want to focus on the two-wheeler space in Royal Enfield, and Yatin just highlighted for us, the drag that is being seen in Royal Enfield. Kerala being one of their prime markets is suffering because of the floods last year and this year. What's your sense on what happens now to Eicher Motors? Do you see that kind of exuberance that the investors had towards the stock and the beeline that they made to enter into an Eicher Motors just a year ago? Now all of that has just completely vanished.
So Devina, again, I think the unfortunate incidents in Kerala probably accentuating the problem for Eicher Motors or most of the companies operating out of that region. And largely, again, I think the kind of issues that we've probably seen with the sector at large, volume growth, if you probably see on a year-on-year basis, I think has been flattish. The company, again, has been guiding for a very nominal increase in terms of volumes for the year ahead as well. What probably happens with a couple of their new launches, I think the reception thereof has been quite good. But again, I think demand conditions are really soft at this point of time. With the festive season coming around, what kind of expectations does one build in? I think the push through that one really expects on the channel side, I think the build up of inventory, what you've probably seen over the last few months, slowly and steadily the inventory is coming up, but the discounting factor, the inability to raise prices very significantly. I think all these have probably played out on the balance sheet of not just Eicher, but the entire auto pack in general. So yes, I think there is a tepid patch that these companies are probably going through. But I think the de-risking strategy that the management specifically is looking for in terms of its export market, the percentage of spares is almost 9 to 10% of its top line. So I think clearly de-risking is the name of the game at this point of time. But I think weak volumes, weak realizations is probably going to hurt the earnings story as well. So I think no significant re-rating coming through. In fact, a lot of downgrades have probably come through, specifically from an FY20 perspective. So I think it's all hope at this point of time whether the second half can bring to the sector at large. But largely, again, I think you should see some improvement happening, but you need to have a lot of patience for this and the sector as a whole. A clear disclaimer, we continue holding Eicher into our portfolios.
Okay, just one more question before we go on to our researchers. This is on Mahanagar Gas. Mayuresh, do you track this one? And now that we're talking about Shell BG Asia looking to exit at a floor price of 733, I mean, current market price about 787, does it get rid of the overhang?
So I think yes, I think to a certain extent, I think the stake sale or the selling off was creating a huge overhang, and I think once this is done, if it is done today, I think you're probably expected to see that overhang come off. The street will then start focusing in terms of the core fundamentals of the sector and the stock in particular. So I think the sector is very, very strongly poised over the next few years, both in terms of volume growth that they can probably deliver. And again, I think the kind of expectations in terms of both the EBIT and the EBITDA per SCM that they can report. Now, the pricing that probably comes through from an input cost perspective, natural gas probably gets revised every 3 to 6 months. But LNG prices have been on the downside and they're expected to remain so, at least from a medium-term perspective. So even if gas prices probably stay a little bit on the elevated level, which they should not, but even if you compare the three main trading hubs on which the average blended price comes through, you're still expected to see them passing it through. And the pass-through is also very, very nominal in terms of the end user. So I think the clean fuel, both in terms of the CNG and PNG usage, the expectations of more territories coming through. And though I think more bids are coming through, more competitors are coming in, I think there is enough space for these cities gas distribution companies to probably ensure volume growth happens at a very decent clip, and their EBITDA per SCM stays relatively stronger as well. So yes, I think looking at their cash flow yields, expectations of high single digits earnings growth, I think the stock looks reasonably poised. The sector also looks very, very interesting in my perspective over the next 4 to 5 years.
Mayuresh, stay on with us. Lots more to talk to you about. But in the meantime, let's go across to our research team. They're standing by, as usual, to run us through those list of stocks that you're going to watch out on the back of news. Some big order wins as well coming in for KEC International. Vishaka will highlight all of that for us. And some brokerage calls this morning, Yash. But Vishaka, let's start off with you.
Yes, so first on my list is Tata Motors. CARE Ratings have downgraded long-term ratings to AA minus from AA and have changed outlook from stable to negative. Then we have Vodafone Idea. CEO Balesh Sharma stepped down as the company's CEO with immediate effect due to personal reasons. Ravinder Thakkar is appointed as the MD and CEO for the next 3 years. HFCL has received purchase orders worth 2,467 crore rupees from BSNL for defense communication networks. Then let's look at some important defaults. DHFL has defaulted on non-convertible debentures and commercial papers worth 1,571 crores, which were due on August 19th. And IL&FS Transportation Networks have defaulted on payment of non-convertible debentures interest worth 4.74 crores, which was also due on August 19th. Nestlé's launched its cocoa malt beverage Milo, manufactured in Singapore and tailored for Indian consumers. Nestlé withdrew Milo from India several years ago as it did not meet Action standards, and India is amongst the largest malted food drink markets with a market size of 8,000 crore rupees. Now, Investec says that Nestlé's launch of Milo could be negative for Zydus Wellness and HUL.
All right, Mishka, thanks very much for that. What are the brokerage calls this morning?
I'll start first with Credit Suisse, and this one's an interesting one because just a couple of weeks back they had downgraded on Reliance, but today they have come out with a report when they've upgraded their recommendation on RIL from an underperform to neutral, and have also raised the target price from 1,028 to 1,210. Now they factor in a stronger balance sheet with a debt reduction of almost $22 billion till FY21. They also factor in a lower capex, low capex intensity guidance and higher GOV valuation. RIL's EBITDA guidance implies that Jio reaching a $9 to $10 billion EBITDA by 2024, which makes them positive with respect to the upgrade. Also, there's a Credit Suisse note on L&T Infotech, wherein they have maintained the outperform rating on the counter, as well as the target price of 1900. They expect that the merger with Mindtree is unlikely to happen in the near future. L&T's management too has refuted any merger plans, which removes a key overhang of the stock. In their view, the potential synergies from the merger, they seem to be overstated, and they're more concerned on steadying Mindtree with new CEO in place. Lastly, when it comes to NTPC, CLSA has come out with a report when they have cut the target price to 165 while maintaining the buy recommendation on the stock. Now, many of the one-offs that hurt their first quarter, they expect it not to repeat in the second half of the year. The thermal plant and emission capex is likely to begin from FY20, which would be the key driver of revenue growth going forward. And the stock has, been an outperformer as it has seen a robust growth when it comes to their renewable energy business. Back to you.
Right, Yash. Thanks very much for that. So those are some of the brokerages and a few stocks to watch out for in trade. The other one, obviously, you can also keep an eye out on is KEC International. That one has also won a big order of about 875 odd crores. News came in post-market hours yesterday. So 294 on the stock in yesterday's session, marginal 2% uptick. But I want to talk about Reliance Industries, Mayuresh. And, the stock obviously post the big ticket announcement that we heard from their 42nd AGM. Lot of brokerage houses now putting target prices of closer to 1,500 on the counter. What would you think would be in it for an investor now that the stock is any which ways closer to 1,300? Do you believe that this particular stock needs to be in the portfolio?
So we do continue holding it, Devina. That's a clear disclaimer. I think the announcements that have probably come through very, very positive. So I think as developments start taking shape and as the regulatory approvals start coming through, I think the net debt-free status over the next 18 months is a huge, huge positive. The second element in terms of in a short supply of 5 lakh barrels from Saudi Aramco, once this deal consummates, I think is also a clear positive because they've already got their core capex plans and their core projects almost complete. So whether you call it the refiner off gas cracker, whether you're talking about the off gas regasification as well, and what probably happens in terms of the different feedstock options that Reliance probably has at its disposal, I think the blended GRMs at a premium to Singapore GRMs will keep on continuing showing its outperformance. What they've discussed for Jio of taking the base from 340 million to 500 odd million, the kind of plans for Jio Fiber at this point of time, and again capex intensity coming off also on the Jio part of the business, I think that's going to be a significant value addition going forward. The REITs that they've probably announced or probably incorporated will also ensure that as cash flows start improving and ARPU specifically in terms of their wireless business as well, which again should start showing signs of improvement because of a whole host of factors in the quarter gone by. Again, that should provide some amount of resilience. Retail, again, very, very strong business at this point of time. And again, I think the granular details for the retail business along with Jio expected to form 50% of EBITDA. I think that's significant, with the rest and majority coming from their chemicals business, which also should contribute significantly to cash flows. And again, the announcement made in terms of more dividends available to shareholders as well. So ROE is showing a sign of improvement. Stay positive on that stock. Clear disclaimer, we own this in Avax.
All right, so it's a thumbs up fundamentally. Let's get in a check on what our technical experts have to say. Amit Shah, technical and derivative analyst at BobCap, as well as Amit Harchekar, director at Indus Genius Investment Advisors. They're both joining us on the show this morning. Good morning, both of you. I'll start off with you, Amit Shah, first. With regards to the index on the Nifty and the Bank Nifty, what would the trade look like considering, there are no major triggers and every bounce is being sold into?
Yes, good morning. So correctly, you mentioned that every bounce has been sold. We are witnessing stiff selling on every rise. Now, if you look at the weekly closing basis over the 9 consecutive weeks, Nifty has failed to cross the previous week's high. And in the last 2 instances, on a weekly closing basis, it has somehow managed to hold above the 11,000 psychological mark. So considering such a steep downside and where we have seen intensity in the fall in the market, it has taken some supportive action around the key Fibonacci support level, and from where it has seen some reversal. So the intermediate trend continues to remain on the negative side. However, considering the last 3 days closing in the market, it has managed to hold about around the 11,000 odd mark. I'll keep my biasness mainly on the pullback side, where on the downside, the last week's low of 10,900 will act as a key momentum support. And the more it sustains above 11,000, the strength can be seen on the higher side, where on the upside, it can show some momentum towards 11,260 odd, where the 200-day moving average is seen. And above that, there is a next leg of resistance at 11,320 odd. So it is more of a sell on rise kind of a trend, but just purely from an index play point of view, it's a pullback trend, which I am anticipating, provided it holds about 10,900. Similarly, on the Bank Nifty side as well, it has a stiff resistance around 28,500. In the last 5 trading sessions, it has attempted to cross those marks on twice of the occasions, but it has, same like Nifty, it has failed to cross that mark. So if it sustains about 28,500, 28,300 odd, that's when I believe there can be some kind of a strength for some pullback towards 28,800 to 28,900 levels on the higher side. On the downside for Bank Nifty, it holds a key support around 27,850. If it violates that level, then again we can see some kind of a selling pressure.
Okay, Amit Harchikar, what about you?
Well, I would still be maintaining my negative views on the market. It's been 3 consecutive weeks where Nifty has closed below 50-week moving average, and that is a sign of concern that we are entering into a bear market territory. Apart from that, if you analyze various asset classes, whether it's dollar, gold, Japanese yen, I think Nifty remains the weakest amongst all, and that is clearly a sign that a lot of outflows are further expected from Indian markets. If you see from a defensive perspective, earlier we had a index like Nifty IT which used to outperform when rupee had to depreciate, but in current scenario, if you see, the Nifty IT index has clearly broken down from a rising wedge pattern, and that is still projecting a target of 15% lower. So I think Nifty is very much poised for a decline below 10,600, and similar is the view for Bank Nifty. If you see on a daily basis, Bank Nifty is trading with a strongly negative reversal on RSI, and that is still projecting a target of 26,200, 300 from a positional perspective. So I don't find any catalyst for the markets to move up. No doubt the markets are into an oversold terrain, but I think a lot of long positions has been built all the way from 11,400 onwards on expectation of a bounce. I think the moment we see Nifty breaking the support of 10,900, all these long positions would run for cover, and you will see good amount of long unwinding in the coming days. So view remains bearish. We are expecting a target of 10,600.
Okay, got that. Gentlemen, stay on. We'll come back to you for your individual stock ideas, but onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. What's the stock today, Yash?
Morning, Devina. So we are looking at L&T, and there's a buy call coming in on the back of the MACD indicator. The MACD indicator, as you know, is a trend following indicator, and it basically shows you the relationship between the two moving averages of the price. How do you interpret it? You go long when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line. Now, in the case of L&T, we've seen that the MACD line, which is the line in the blue, cross or give a positive crossover above the white line. Keep in mind that it did make a false crossover just 4 trading sessions before that, when it had moved higher, but that move was completely negated as the stock went from almost the high of 1400 back to the level of close to 1300 when it came to the price action. But what we saw in terms of prices is that the day before that, which is Friday's trading session, there was a dragonfly doji form on the daily chart. So what I mean by the dragonfly doji is the one over here where it has a large lower shadow where the prices didn't move any further when it comes to the real body of the candle. So the open and the close were fairly similar, with a very smaller upper shadow. And then we saw in yesterday's day of trade that the stock went up by almost 1%. But that is as far as it goes on the daily time frame. If you take a look at the weekly chart as well, and the 5-year weekly chart for L&T should also come up. And there, as you could see, the RSI, that has given a positive divergence. If you zoom into the RSI, the most important bit to note over here is the fact that around the mark of 40, the RSI is fairly stable, and it offers a great risk to reward ratio. Almost 4 times in the last 5 years that the RSI has come down to the levels of 40, it has always given a positive divergence, and we've seen the stock price move higher as well. If you take a look at the price again, the 100 week simple moving average, that has also acted as a strong support. There are some amount of whipsaws here and there, but it has always remained there. But keep a strict stop loss. The 5-year trend line is around the mark of 1300. As long as it's trading above 1300, the trend is positive. If it falls below that on a closing basis, we could see weakness coming in.
Right, and how well has this worked in the past?
So 3 out of the last 6 times that the MACD has given a positive crossover, Devina, the stock on an average over the next 1 month period has managed to go up by almost 5.2%.
Great. Yash, thanks very much for that. That's L&T in focus. Let's also get in some of the stock ideas from our technical experts. Amit Harchekar, let's start off with your stock calls for the morning.
Well, I have a 2 sell and 1 buy. My first pick would be buying put option of Bajaj Finance of 3,300 strike prices. Here the recommendation would be buying with a stop loss of 20. Right now it's trading at around 70. We are expecting a target of 170. Now the rationale behind it is Bajaj Finance is now hovering near the resistance of 50-day moving average. Plus, if you see on the RSI front, it is clearly giving you a negative reversal. So that opens a downside target of 3,050 to 3,100. So we believe based on intrinsic value, this put option of 3,300 should be trading around 170 to 200 in next 3 to 4 trading sessions. Our second recommendation would be going short on State Bank of India. Again, if you within the banking space, SBI remains the weakest among all. And if you see the Nifty PSU Bank Index, it has been already trading below October 2018 lows. So we believe SBI is poised for a good amount of decline. The long-term rising wedge support on a yearly basis, that is placed at 265 to 258 zone. So we believe that would be the area where one should cover up their short positions. Right now the stop loss what we are recommending would be 300 on the closing basis. And our last call would be buy on Oil India futures, which is trading around 150 to 152 rupees. We believe 143 should be the stop loss for your long positions in futures, and we are expecting a target of 170 plus. Now the rationale behind it is, if you see the price data of MCX crude, it has completed a bullish triangle, and that is projecting an upside of 30%. Even in Brent crude prices, we are quite optimistic. We think this consolidation phase of the bull market is over, and we should be heading towards $80 in at least 1 to 2 weeks time frame. So based on that scenario, we think oil exploration companies should benefit. Oil India is one of it, and we believe 143 becomes a very strong solid support, where we are already seeing good amount of positive divergence in RSI.
Right.
So we think at these levels it becomes a good buy.
Okay, I want to come back to Amit Harchekar on the Bajaj Finance put option and the volumes that exist there. But before that, Amit Shah, your stock recommendations for the morning.
So I have one buy idea and one short idea. So I have a buy call on CESC Limited. The stock has been trading with strong volumes in last couple of trading days, and it is nearing its weekly and the monthly resistance mark, of which is close to around 100 odd mark. If you look on the broader structure, the stock has been consistently making a higher top, higher bottom formation, and I believe the more it sustains above 800 odd mark, the stock can see fresh buying momentum entering into it, and on the upside can target close to around 840 to 850 levels in short term. On the downside, the stock has a good support around 785 that can be acted as a key momentum support or stop loss for the counter. I have a short idea on Cummins India. The stock has been witnessing steep intensity on the downside. I feel there is another leg of downside which is still remaining. It is witnessing a stiff resistance around 602 odd mark. On a weekly basis, that will act as a stiff resistance for the counter and should be considered as a stop loss level. On the downside, the more it sustains below 600, I feel the weakness can intensify, where levels of 545 to 515 levels can be tested in coming few weeks.
Okay, got that. We've just about a minute left to go for market pre-open. A quick technical call on Reliance Industries, Amit Shah?
Well, it is. We have seen a good gap up during after the company had the AGM, but it is now trading in kind of a flag formation. It is at a resistance of around 1305. If it crosses that, then we can anticipate further upside towards 1340 to 1350 levels in short term. However, on the downside, the stock will hold a very good support around 1250 odd levels. So it can see some kind of a retracement towards those levels. If it falls below that, there can be some kind of a sideways traction. But till the time it is not breaking below 1240 odd, it can see some kind of a retracement and fresh buying momentum above 1305.
Okay, got that. Just stay on with us, gentlemen. We've got the pre-open in just about 10 seconds from now. Watch out closely for what happens to the index open. As of now, the SGX Nifty is trading absolutely flat, slight -5 there. Also, the currency has been weakening over the last few days. Yesterday, too, saw about 0.4% weakness. We'll see how that opens up too. So right now, the initial few ticks suggesting that the index is opened in the positive territory, about 41 odd points on the Nifty, 110 odd points for Sensex. Individual counters, starting off with the auto pack, which is looking okay in pre-open. So you've got Bajaj Auto, Hero MotoCorp, M&M, all of them opening positive in the session. In fact, Hero MotoCorp is right at the top there. Bajaj Finserv is up about 2 1/4. Then you've got IT. TCS is done well, about 1% right now. Tech Mahindra is up about 0.75%. Wipro is up about 0.5%. So both these pockets. Dr. Reddy is up about 3/4. ITC is up at 127, so that's looking fine. Sun Pharma, yesterday's top gainer on the index, carries forward some gains into today's trade as well. And then you have an HCL Tech, which is doing okay, and Infi2 up about 0.5%. Amongst the bigger losers, Tata Motors is down. You've got Care Ratings downgrading some of their debt to about AA- from AA. So that's the other one that to watch out for, and they've reduced it to a negative from stable as well, their outlook. Kotak Mahindra Bank is down about 0.5%. Indian Oil is down 0.5% as well. Currency weakens further, 71.58 is where the rupee is trading at.
Two stocks, MGL as well as CG Power. Just want to mark those two specifically because they arguably would be movers. MGL will have a bulk deal. For now, well, doesn't look like. Let's see what price it settles at. The other one, of course, is CG Power, wherein the report is very damning, and we're seeing the impact on the stock down about 18%. Not surprised at all. Let's see how this one shapes up. We'll give these rates a chance to stabilize and then talk more about them. A couple of stocks. Firstly, actually, Amit Harchekar, very quickly, 30 seconds. Is the volume in the Bajaj Finance put lucrative enough? I don't see very high volumes here.
See, the open interest is around 2,56,000 and implied volatility of the put option is around 40%. We think instead of buying futures with a stop loss of 4.5%, I think this put becomes a good option where again your stop loss is nearly 50 points and the risk reward ratio is more than 2-3 times.
Okay, fair call. Amit Harchekar was convinced about this. Let's wait and watch what happens there. Then, of course, just before we get to the IPO, the other stock which has done really well of late is SBI Life. And we'll get a fundamental view there too, but just technically, Amit Shah, SBI Life at new highs. Is there more in store? Can somebody go out and buy this afresh?
So there is a lot of strength seen in the counter over the last few trading days. Yes, the stock has given a breakout above 820, 825 odd and has been sustaining quite strongly above that. There can be more room. The stock is in an uptrend where it is making a higher top, higher bottom formation on the all-time frame charts. So I believe the more it sustains above 820, 815 odd, the strength will continue to remain in the space, and considering it is now entered into non-charted territory, we can anticipate a further upside of close to 8 to 10% in near term.
Okay, gentlemen, stay on. The world's largest solar EPC player is all set to list on the bourses today. Sterling and Wilson Solar's IPO was subscribed 92%. Will the company witness stronger demand in the secondary market? What is the likely valuation? And what are brokerages saying the stock could do in the times to come? Yash Upadhyay is standing by to tell us. Morning, Yash.
Morning, Neeraj. So the issue price for the IPO is fixed at about 780, like you rightly mentioned, because of the volatile market conditions, it has received a tepid response. So only managed to get a 92% subscription. The offer is a pure offer for sale, wherein the promoters, which is the Shapoorji Pallonji Group and the chairman Khurshid Daruwala, are looking to sell their stake, bringing the overall promoter holding down to 75% from the existing 100%, as they look to raise about 3,125 crore rupees. Now, keeping that in mind, what would be the listing scenario like? If it is listed at the upper end of its price band at 780, it would command a market cap of 12,500 crores with a price to earning multiple of 19.6 as well as 1.5 times in market cap to sales. But the most likely is what most of the market experts are anticipating is that the stock would be listing at a discount. It should manage to list at about 730. The market cap would fall down to 11,700, and subsequently the price to earnings and market cap to sales too will decline. On the other hand, also let's take a look at what does the company actually do and its business. Like you rightly mentioned, it is the largest end-to-end solar EPC solutions provider, is the largest globally, and also provides operations and maintenance services. Its order book currently stands at around 3,831 crores. It generates almost 100% of its revenues in FY16 from India, but now it has diversified its operations, getting most of its revenues, almost 20 to 25% from Europe as well as US. Additionally, it also has letters of intent worth close to 3,908 crore rupees. So it means that they have a very robust order book standing at around 7,700 or 7,800 crore rupees. In terms of financial performance as well, it has seen a strong 44% CAGR growth in terms of revenues over FY16 to FY19, 50% when it comes to their EBITDA and the net profit. EBITDA margins too have been fairly stable around the 6.5 to 7% mark consistently over the last 5 years. In terms of return ratios as well, they have been fairly robust. 76% return on equity, a return on capital of almost 121%, and return on assets of almost 12.4%. So overall, the IPO seems to be good, as most of the brokerages too have given a thumbs up to the issue.
So our brokerage is saying, Yash, that post-listing there could be some buying that could be seen?
Not that I have come across any of the reports, but most of the market experts, given the kind of response that it has got, don't expect that it would list at a premium. So we could see some amount of pressure today.
Okay, thanks a lot for that, Yash. So some pressure on listing today. Obviously, it didn't find enough appetite in the primary markets itself.
Even yesterday's listing, Spandana
Spurti,
was actually down by the end of the day.
Yeah, this one is a pedigree company.
Yeah.
The only point is it didn't see enough. It's a large issue, so that is the other point. Let's see what happens today. Mayuresh, any thoughts on Sterling Wilson and Spandana Spurti, the one that listed yesterday as well?
Tough times for them to list because of the volatility. I think fundamentally, Sterling and Wilson probably is in a very, very sweet spot. Decent order book, as Yash was mentioning. I think very good earnings CAGR. They are de-risking. The return ratios are very, very strong. But looking at the tepid response and looking at market conditions, I think a soft opening not ruled out. But I think for the renewable space and for power as a space in general, I think we are playing it through Tata Power, because I think it's got all the elements that you probably need. And the recent Mundra ruling will also ensure that the fixed cost under recoveries that they were probably reporting comes off significantly, aiding cash flows. And again, the debt deleveraging, as they are planning over the next few quarters, should also aid and support return ratios. So I think we are probably biased towards Tata Power at this point of time.
Okay. A quick word on Sun Pharma. Amit Harshekar.
Well, I have a positive view on Sun Pharma. For one reason, the stock has formed a bullish inverted head and shoulder on long-term charts with breakout at around 450. We believe this eventually would force the stock price around 485 to 500 in the coming weeks. So at these levels, it becomes a good buy. Stop loss for the short-term traders would be 395 on a closing basis.
There's hardly any movement in any of the index stocks as the pre-open rates have settled down. We've not had a movement on the index stock more than 1% either direction. So the top Nifty gainer and the top Nifty loser at the end of the pre-open session is less than 1% apiece. But the broader end of the spectrum, the usual suspects are reacting. CG Power is down 19.78% in the end of the pre-open session. Dewan Housing down about 5%. Again, not unexpected. The one that's making a really good move is MGL, correcting for the last few days. Yesterday, in fact, if charters would believe, and the way they saw the charts, they said that it is oversold, but the trajectory looks lower. Today, the deal might happen at a floor price of 733. The stock 6% higher. Is it a case of the overhang going away? The question that you asked, Mayuresh, because the pre-open session is pretty active for MGL.
Yeah, and in fact, the stock made its move towards these 850 levels just a few days ago. You know, you saw the pricing action, but it didn't. In the intraday move, the stock just came off quite rapidly. So, and then post that, it's been sort of in the doldrums, and now finally you've got this overhang out of the way. There's some clarity that's coming in, and therefore the stock in today's session is reacting.
Yeah, let's just see. Fundamentally, I was reading a couple of reports which stated that maybe the second half will not be as great, and the numbers were okay, but there were some issues that left to be desired. However, 6.5% higher in trade. Mayuresh has already given his view, but a quick chart check before we get to what all you need to know. Amit Shah, quick perspective out here. MGL was declining the last couple of days. Today, seeing a sharp uptake. Can it sustain?
Well, it has a very stiff resistance around 820. Unless this is not crossed, I believe any upside to here or towards this level can be short-lived. On the downside, if it violates 780, then I feel there can be fresh selling pressure which can be seen in this counter.
Its high was, I think, 856 on the 13th of August, and then it closed at 785. So, you know, big gyration on an intraday basis for that particular stock. But we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. CG Power's audit committee finds multiple lapses in the company's accounts, including potential underreporting of the group's liabilities and unaccounted advances made to other parties.
Credit Suisse upgrades Reliance Industries back to neutral from underperform after a downgrade just 2 weeks ago. Target price has been pushed up to 1,210 rupees from 1,028 rupees per share earlier. Debt reduction and higher expected contribution from Jio are the key factors.
DHFL defaults on payment of NCDs and commercial papers worth 1571 crores due on August 19th.
Shell looks to sell 98.8 lakh shares in MGL with a floor price of 733 per share. That's a discount of 7% to yesterday's closing price.
Vodafone Idea CEO Balesh Sharma steps down as company's CEO with immediate effect due to personal reasons. Ravindra Thakkar has been appointed as MD and CEO for a period of about 3 years.
Lastly, the world's largest solar EPC player, Sterling and Wilson Solar, is all set to list on the bourses today. The company's IPO was subscribed 85%. Okay, well, 3 minutes left for the markets to kickstart trade. Mayuresh, maybe not lump sum, but in a staggered fashion, what is a great stock to put money in, say, over the course of the next 6 months?
No, so again, I think if you probably need to probably have a steady compounder at your disposal. My own sense is that a few of these better rated NBFCs, I think though the environment probably still looks a little bit patchy for the entire universe as a whole, I think the announcements made in the budget so far and what we probably discussed in terms of how they've probably remained steadfast in terms of reported numbers, whether it's the asset quality, some deterioration obviously expected on that front, some deterioration expected in terms of the NIMs and spreads because the borrowing costs had probably gone higher. But again, the large element in terms of capital adequacy and the disbursement growth remaining strong and expectations of a good second half coming through, probably Q3, Q4 expected to be better for these better rated NBFCs holding on. I think that makes a strong case for that. So I think Chola Finance within that is something where I'm biased within my funds itself. And also a few of these liquor stocks because our own belief is that whatever you've probably seen in terms of increase in ENA and glass prices, I think that clearly impacted the overall operating performance. But as these factors start slowing down, a few of these states have increased prices as well, and the volume growth that we probably witnessed is very, very encouraging. And again, I think the kind of discretionary spends that we're seeing, the lifestyle changes that we are probably expected to witness, I think the better rated, less leveraged liquor companies also stand in a very good spot. So continue remaining biased on Radico Khaitan within this space as well.
All right. Just quickly, Amit Harchekar, on Infosys, I think when we spoke to you 2 weeks back, you were negative on the stock. What would you do with it now?
Well, the view still remains negative. As I said, Nifty IT has clearly given a breakdown from rising wedge. It is projecting a 15% slide. We are seeing similar structure in Infosys. where again a long-term rising wedge has completed, extended from the highs of October 2018. We think 810 turns out to be the upstress zone of rising wedge, which should be kept as a stop loss on a closing basis. And we believe the support of this rising wedge is at 745. So eventually we are expecting a target close to 720, 715. So even at these levels, it's a shorting candidate.
Okay.
Short-term traders are suggested to keep stop loss of 810 on a closing basis.
Okay, quickly, 10-second stop call for the day. Amit Harjekar.
Yeah, I would go for going short on BPCL with a stop of 360. We are expecting a fall towards 310.
Amit Shah.
Well, I'll continue to remain positive on CESC with 785 as a stop loss.
Okay, those are the top calls. Gentlemen, stay on. We'll just take in opening thoughts from you post-market open, though. The market move may not provide too much of a change in opinion from before and after, because we are expected to start off very, very flat. This is how the rates are. 10 points, just 12 points on the Nifty. It's very, very flat. The Sensex to about 34 odd points, so hardly any move there. The Bank Nifty marginally in the red, but flattish, you would have to say, 0.11% lower, so that's hardly any move. Then it's unchanged, literally unchanged for the three benchmark indices. Mid caps and small caps, those indices will come up on your screen again, very unchanged. Let's quickly flip to individual stocks, because the large markets, the indices are not doing anything. Let's see if individual stocks are doing. If we can get the heat map of the Nifty 50 up on the screen and show you what's moving and what's not. So it's even Stevens, equal red and equal green, maybe a bit more red, but almost even Stevens. Infosys and Z are the top two gainers, slightly less than 1%, but the top two gainers. iShares 0.75%, Hero MotoCorp 0.6%, Gale about 0.5%. But again, as you can see, there is no big move. I don't think there is even any trend. You probably have a TCS and an HDFC Bank from amongst the heavyweights which are in the green, but that's too marginally. Infosys, of course, the heavyweight and the top gainer. What's losing out? Yes Bank a couple of percentage points lower, Britannia about 1.5% lower. It's not done too well post its induction in the Nifty, by the way. Keep that at the back of your mind. JSW Steel down about 1%, Bharti Infra 1% lower, Tata Steel about 1% lower. Can't spot Reliance in the top mover, so it must be lying somewhere with a bit of a lull. Really, Reliance Industries, hardly any moves seen there. I really can't spot it too much, so must be 0.5% lower for Reliance. Very quickly, the large caps not making too much moves. What about the broader end of the spectrum? A couple of pockets that I want to highlight before I hand it over to Devina. What's happening across the broader end of the spectrum? MGL selling, Shell selling stake. We don't have the bulk deal as yet, but the pronouncement came in, so should happen anytime. The stock is up 9%. Maybe that's the point, that the overhang of the constant selling opinion or option that would have come in from Shell is out, and the stock is rejoicing. It's broken some key resistance levels as well, I reckon. And right now, currently, doing very, very well for itself. What about some other stocks which have done well in the last few days? All of them near 52-week highs. SBI Life, Aavas Financiers, Marico. Today start off okay, but otherwise have been doing well. But MGL spectacular, Devina. Anything else that matches up to it?
HFCL, that too does well today, about 7.5%. That's doing okay for itself in today's trade. Hathway Cable, and this one has had a really smooth run over the last 4 or 5 trading sessions. I mean, stocks up 5% today. Last 7 days tally almost 40% for Hathway Cables. Coffee Day had seen some recovery in yesterday's session. Today's session 2 is up about 5% Some commentary with regards to bringing down the overall debt exposure to in the company. Havells is up 1.8%, but at 675, it's still below its recent top of closer to about 740 odd that it was trading at. Repco Home Finance 1.5% higher. Quest Corp moves up. J&K Bank 1.5% higher. L&T Info, that too trades with gains. Some losers in the session. CG Power, the big knock, 19-20% lower now. Lower circuit for that one. Jet Airways is down about 5%. Cox & King again another lower circuit. Divan Housing 4% under. You've got Minda Co-op, IDBI Bank 2.5% low. IDBI actually is just whipsawing all the way. The last entire week post its numbers. It's been totally volatile in terms of its daily price moves as well. Yesterday's session was up. The day before that was down. Today is down about 3%, 27 on the stock. Ujjivan Financial Services. Yesterday we spoke to the management with regards to the DRHP file for Ujjivan Small Finance Bank, and the stock's down about 2% in the session. But broader market picture slightly better. Advances of about 582 stocks. You've got declines of about 491 stocks in the session. But quick opening thoughts from our experts. Let me come to you, Amit Harchekar. On an intraday basis, what is the crucial level on the index to watch out for?
Well, I think 11,030 on the futures remains a very short-term support. If that gets violated, I think you can expect further downside momentum towards 10,940, 930. So again, as I said, but overall view still remains quite negative. We think rising USD/INR would put pressure on the markets in the coming days.
Amit Shah, your opening thoughts?
Well, so I feel the market is still holding above the 11,000 mark, which I will consider as a positive side for the pullback. Not that the intermittent trend is changing, but if it manages to hold above 11,100 for most part of the day today, then I'll be more interested that we can see some follow-up buying momentum towards 250, 260 odd levels on the higher side.
Mayuresh, very quick thoughts. Are you even remotely considering Coffee Day as an investment? It's done well in the last couple of days. The announcement was positive yesterday.
No, not at all.
Okay, that's as quick as it can get. Great. Okay, gentlemen, all of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. The markets are absolutely flat, but there is lots of murmurs of things happening on the local front and lots happening on the global front. So what do fund managers do in a scenario like this? What do chief investment officers do? Well, the CIO for equities at Tata Mutual Fund joins us right now on the show. Rahul Singh needs no introduction. Rahul, good having you. Thanks much for taking the time out. Tough times to generate alpha, but maybe tough times to beat returns as well. How do you see the investing scenario right now with one, the hopes around stimulus from the government, but two, a very volatile globe?
Yes, good morning. I think the challenge is to find the next big sector or the next big space which can generate alpha. So we saw first 6 months where corporate banks did well. I think they are taking a little bit of a breather. We remain convinced of corporate banks as a theme going forward as well. So that's a segment where one can add on these corrections. I think beyond that, it has become more of a stock-specific reaction to what the valuations are and where the slowdown is impacting more. Because what is happening is that the consumption slowdown is also impacting different companies and different sectors differently. And most of these companies are at different stages of their valuation, re-rating or de-rating. So therefore, one has to be very selective when we look beyond, let's say, corporate banks. And some of the sectors which could have stepped up and generated alpha, like pharma, is also a mixed bag. So yes, it's beyond some of the things which we have been talking about, and it's become a consensus, like the banking sector. I think it's a bit of a mixed bag. Within the financials, I think insurance as a sector has looked good for some time now. I think that remains a structural story. And there are options available for investors to look at it. But yes, I mean, a big sector to step up and create alpha is still looking very, very challenging.
So Rahul, when you talk about the slowdown in consumption impacting different sectors in different ways, are you talking about the different verticals of consumption-oriented sectors like discretionary and staples and others, or are you talking about something else which is getting impacted as a result of slowdown in consumption?
Well, yes, you are right. That's the broad point of view. But I think beyond that, what is happening is some companies who have been executing well, who have had a management change or a strategy refresh, they seem to be holding on to their volume growth targets and their top line targets much better than companies who are not going through that kind of a bottom-up change. So in a way, one has to look at companies at the individual level, look at some of the things which the management might be doing recently, which seems to be giving them market share gains. Some companies, for example, are also gaining from raw material price deflation. So, as I said, there are a lot of moving parts in each company when you start looking at each company. But there are, it's not a broad brush, therefore. But I think gradually what we are seeing is more and more companies in the consumer space, whether it is discretionary or staples, are getting impacted by the slowdown. So slowly the kind of the breadth of the slowdown, impact of slowdown is visible much more than what it was, say, even 3 months back.
Rahul, good morning. The common consensus seems to be that you start investing in bits and pieces, do an SIP, but which avenue do you start looking at first off? Obviously, these are periods of volatile times, and you will see normalization over a longer period of time. So if you want to capitalize on it the most, which are the sectors to focus on?
Well, I think from a segment point of view, from a mutual fund point of view, I think investors should start looking at multi-cap and large and mid-cap as options, because that's a segment where the valuations have corrected in the mid-cap, small-cap space, and we had started to see the correction almost 2 years back. Only now that the correction is spreading to some large cap or the large cap leaders in the last 3 to 6 months. So that's a segment which I think will do well. I'm not advising investors to immediately go to small cap, or even if they go to small cap as a theme, spread out their investments over 6 to 12 months. So therefore, a multi-cap or a large and mid-cap is a good way to start, kind of investing in this kind of a market. Also, one of the segments which has got impacted is the value segment, where I think the valuations, the differential between growth and value has become significant. It has always been the case over the last 2 to 3 years or even 4 years. But now I think we have reached a point where some pockets of value seem to be generating reasonable growth, whereas some pockets of growth as a theme seem to be disappointing on growth, and some of that disappointment could be structural in its nature. So therefore, value as a theme, and therefore any thematic fund which captures value as a theme could give you that alpha over the next 6 to 12 months, assuming that the government comes up with a stimulus, does a few things to revive the economy, because most of these value segments which we are talking about, whether it's in autos or anywhere else, is or even NBFCs, are reasonably priced, but they are a play on cyclical recovery in the economy. So one will have to be patient. It's a slightly higher risk segment to be in right now if things go into a tailspin, but that's a segment where some portion of the money can be looked at if the risk appetite is there.
Do you expect this polarization that we're seeing towards the larger safer haven names to continue for at least the near term?
I think this year the polarization is already much lesser. If you look at the large cap space and the Nifty gainers for this year, you would see names there which you would not have imagined would be the case in sitting in January or February. So we've had a few interesting stocks which are in the top 10, 15 gainers in Nifty. So within the large cap space, we have seen some of the leaders of last year actually not performing as well, which includes, for example, IT or some of the consumer staples. They have barely held on to their prices. They have not gained. So some leadership change is already happening in the large cap space. So I don't think that this kind of polarization will continue for too long. I think we are seeing some disappointments in some of the leaders of 2018 in terms of the earnings. In some cases, the valuations were too high. So I think the adjustment is happening gradually in the large cap space. But once the adjustment or the polarization reduces in the large cap space, that is the time when I think the mid cap, small caps will start to do well. So maybe there is a few more months or couple of quarters to go for that to happen.
Okay. Rahul, the other bit is, I heard you mention in your first answer that aside of financials, it's almost turning out to be a very bottom-up market. Still, there might be, in your research, in your team's research, themes that you guys believe would show earnings growth, maybe with a bit of a delay, but that's where the strongest earnings growth will come in. Where is this pocket? Because invariably, the stock prices will at some point of time converge with the growth in earnings.
That's correct. I think the segments which look potentially interesting, in order of not in order of priority, but segments which look potentially interesting is capital goods, where we've seen some green shoots. Some companies have remodeled their business models and they are doing pretty well, despite the fact that capex really hasn't picked up materially. But we have seen some pockets of capital goods doing well. I think the other segment which we are looking at closely is manufacturing as a theme, and there we are talking mostly mid caps, small caps, because the capacity utilization in the economy had gone up till March. We'd probably take a knock in the capacity utilizations in the economy as a whole in the June and September quarters. But once that starts to revive, assuming that the economic recovery or economic uptick starts to happen post festival season, you would see some revival in the manufacturing sector. And the third potentially could be pharma. We are still, the jury is still out whether we have seen the last of the pain in terms of the regulatory impacts which the companies keep on having, and each company is in a different stage of that. But I think from an earnings point of view, we are looking at pharma earnings actually doing pretty well over the next 2 years. Some of them are not so cheap as stocks, which is why I think there is some time to go before one can conclusively say that pharma as a sector has formed a bottom.
Okay, Rahul, we'll leave it at that. Thank you so much for taking the time out and giving us your thoughts today. I appreciate it.
Thank you.
That's Rahul Singh of Tata AMC. Need to slip into a quick break on the note that the markets are lying absolutely flat. But there's one space that is perplexed everybody, that's auto. The industry's appeal for a fiscal stimulus as well as slowdown forces layoffs and shutdowns. We speak to Maruti Suzuki's chairman, R.C. Bhargava, on that and more. Stay tuned.